Well, good morning. Welcome back to the Broadcast Retirement Network. I'm Jeff Snyder. This is BRN Sunday for Sunday, April 17th, 2022. Hope you're having a great Easter. Thank you so much for stopping by and joining us. We've got members of the media, academia, and financial services standing by as we analyze all the news for the week. So sit back, relax, enjoy this episode of BRN Sunday. Well, let's kick things off with a look at what's happening on Capitol Hill on the legislative, litigation, and regulatory front. Joining me on the line, you know them as the Legal Eagles, but we also know them as David Levine, Kevin Walsh. Both are principals with Groom Law Group. That's an employee benefits law firm based in Washington, D.C. Gentlemen, thanks so much for joining us on the program this morning.
Jeff, it is good to be here. And, you give us that great intro. At the same time, this week we're thinking we might be doing a back to basics segment if you're okay with that.
Yeah, absolutely. And Kevin, I want to come to you. Why don't you kick us off? Because uh, basics are always good. I think the fundamental underlying principles, we all have to know them and be reminded of them. So what's top of mind for you and David this week?
Well, top of mind is we've been getting questions from listeners frequently recently about, really what's the real difference between, saving for retirement inside a 401k plan versus, saving for retirement inside an individual retirement account. Basically our plans and IRAs the same things, and if not, how are they different? And, I think at a high level, there's one thing that they have in common, which is, listeners, you're right. They both do offer or both can offer a tax advantage way to save for retirement where um, individuals are able to save using either pre-tax dollars, which are, essentially, uh, provide an immediate either tax deduction for the current year or aren't taxed on their way in and don't count towards your income for that year, but then you're taxed on the way out. Or, there's a post-tax for option where you're using dollars that have already been taxed, and then the theory they're not being taxed at the end. Now, um, one of the key differences, there's limits in terms of how much you can put away each year.
Hmm.
Inside of a plan, you can put away significantly more money than you can in an IRA each year. Now you can also do both. A second big difference is that your 401k is maintained by your employer. Um, Everybody else at your company has the opportunity to participate in it, whereas your IRA is an individual account. And then, a third key difference here is that, and this is kind of the one that I think is a little bit wonky, that, depending on your income level, there may be restrictions on the types of contributions that you can make to your individual retirement account. Whereas, regardless of your income level, you can contribute, the same amount as anybody else to your 401k. So, David, do you want to expand on any of those differences, or do you want to bring up different differences?
I was going to talk a little bit more about the prohibited transaction rules, if you're okay with that, Kevin.
Please do.
So, Kevin said the word wonky, so I wouldn't be a wonk if I didn't jump on that one next. Um, let's dig into this a little bit here. Something people need to keep in mind is the rules are similar. As a very baseline concept, IRAs have prohibited transaction rules. They're in the Internal Revenue Code. Some of these same Internal Revenue Code rules can apply to ERISA plans, but ERISA has its own so-called prohibited transaction rules. And what is a prohibited transaction, you may ask, because I'm kind of jumping ahead. In English, under the rules that govern plans and IRAs, a lot of things that it takes to run these types of programs, whether it's a plan or an IRA, are prohibited unless they're allowed, because they basically say you can't pay compensation unless it's reasonable and those types of things. So the way it works is both under the world for plans and IRAs, you have a whole bunch of rules saying you can't do this, you can't do that, but then there's a whole bunch of exceptions. IRAs work in a very similar but not identical world to 401k plans. But a key takeaway on this is they're both subject to it. And in fact, in some cases, it's the Department of Labor who explains what these rules mean. The IRS and DOL have divvied it up between the two. So what's the takeaway? Because I'm already getting way too wonky and I can feel it. The takeaway is, for those who are familiar with plans, when you get into the IRA space, it's not a free-for-all. A lot of the same rules that apply in the plan world about self-dealing and other things can also apply in the IRA world, and there can be some draconian impacts. Secure 2.0 and other legislation could have impact on on plans, but there's also impacts out there with legislation on IRAs. So the key takeaway on this is just if you have an IRA, don't assume that all those sort of convoluted, almost backwards rules that you deal with in the plan context don't apply to an IRA. So in other words, don't buy a ski house with your IRA and assume you can live there all winter. That's the quick answer.
That's a good example, David. Good metaphor. Let me ask you, gentlemen, a question. Rollovers, and this is where the retirement plan and the IRA kind of are in sync. I don't know if that's the right word, but they're tied together. An individual can roll their money out of a retirement plan into an IRA, and there are rules. You get a special tax notice. I think it's called a what's it, a 402, no, 401F notice, whatever. You guys will correct me.
402F notice.
402F notice. I remember my administrative days, but these and vice versa. If you have an IRA, you have a retirement plan, you can consolidate and move money in from the retirement plan, from the IRA into the retirement plan. So that I think that's important to note as well. You need to be aware of the transference of these funds from one vehicle to another. And also there are expenses. I think Kevin may have talked about this. There's differences in share classes when you go from one type of plan to another.
And Jeff, I
went all over the place on that one.
Well, I went down the wonky rabbit hole, so I deserve this one. I'm going to try to give one key takeaway. You make an excellent point that Congress over the last 20 years has increasingly made it easy to port between plans, IRAs, different types of plans. But there is one thing I'm going to grab onto in what you said, Jeff. So many people use Roth contributions, whether in Roth IRAs or Roth 401ks these days. And generally, there are rules that allow you to move from a Roth 401k to another Roth 401k, or even a Roth 401k to a Roth IRA. But as of right now, you cannot take money in a Roth IRA and bring it into a Roth 401k. It actually has to stay in the IRA world. Now, there is legislation pending out there. The Senate has had this in proposed legislation for a while that would actually sort of levelize that, where it would say that Roth IRA dollars could roll into a Roth 401k account. So I think you make a great point that money is extremely portable, if I'm going to put it in English, and it's not perfectly portable between every single option at this point. But it wouldn't surprise me as Secure 2.0 and other legislation moves down the track that this becomes even more fluid in how you can move money back and forth between the different types of vehicles.
Thanks for that, David. Kevin, I'm going to bring up a really important topic I know you love, missing participants. If you have an IRA, if you have a rollover IRA, a regular IRA, or even a retirement plan and you moved employers, you got to make sure that your email address, your address, everything is up to date. So you don't lose those funds, right? You don't want to have to go back to PBGC or some database to find your money 30 years later or even 5 years later, because who knows where you'll be.
Yeah, I mean, I think it's important that individuals can play a role in the retirement system by keeping their address up to date if you're participating in a plan, or keeping your address up and contact information up to date, with your IRA provider, because at bottom the retirement system functions best when individuals are able to get the money that they save for retirement to help secure their retirement.
Yeah. Well, gentlemen, I think we need to do more back to basics. I'm not discounting all the great up-to-date information because I think we covered some of the basics when you guys are talking about the legislation, the regulation, the litigation. But these are great reminders for even people like me who, look, I forgot that it was a 402F notice. To me, it was like a 401 blah, 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 right? There are things we forget because we're not doing them every day. And I'm a perfect example of that. So, gentlemen, let's keep it up. I really appreciate you coming on the program. And wish you gentlemen a great rest of the weekend. Thanks so much for stopping by, and we look forward to having you back on the program again very soon.
Thanks, listeners. Thanks, Jeff.
Thank you, Jeff.
Bye, boys.
Thank you, listeners.
Welcome back. And markets are actually closed on Friday for Good Friday. And joining us on the line, we're doing this a day early. He is the lead anchor for the TD Ameritrade Network. You can find him Morning Trade Live, Markets on the Close, bookending the programming there, the trading day programming, talking about Mr. Oliver Rennick. Oliver, great to have you back on the program. Thanks so much for joining us.
Sure thing. Thank you.
And thanks for adjusting your schedule to accommodate Good Friday.
No
Um,
problem.
okay, let's get your sense for the market for the week, short trading week. That typically when you have a short work week, everything seems to be compressed into into the 4 days. But what's your sense for where we stand economically and also from the stock market perspective?
We had a few interesting days for a holiday shortened week, and the biggest day was on Tuesday after Consumer Price Index, CPI inflation data, and the market's response to it. That is probably the most important event of the week because there was a moment where the market rallied and bullish investors were trying to spin the data as a positive sign that inflation might be peaking in terms of its trajectory. But it did not work. The market faded back down after a really strong start. The sellers joined in the party and basically broke that rally. So the important takeaway from that is that even if inflation and its trajectory slows and the rate at which it's going up perhaps has peaked, there is still a very, very high nominal level of inflation, and that's a problem. And it's very hard for investors to stomach this environment where the Fed is pushing back against that inflation, forced to respond by draining liquidity from the market and slowing down the economy. And the test on Tuesday was a very important update because we don't really know at any given moment what's going to be more important in markets, rate of change or absolute nominal level. And in the case of inflation right now, it looks like the level of inflation is what's important. And this is a crucial concept. The month-over-month data point for CPI on Tuesday came in a little bit shy of what the economists had expected. So it was still a decent clip, but it was slower than what economists expected, and it was fairly muted. And that gave the idea that perhaps the ascent of goods prices might slow a little bit from here. But how much they slow is going to be important because they're still rising. They're just rising at a slower pace. So when your baseline for CPI is 8.5%, which is the highest in 40 years, the slowing of its ascent is not a terribly great thing. It's not the worst thing. It's better than the alternative. It's the alternative just blowing out higher and goods prices going higher. But it's not very encouraging from the standpoint of changing any policy that's already been building from central banks. So the fact the market faded back down and bond yields on Friday are starting to wake back up and the dollar is surging, you're having basically every asset class point in the same direction. Stocks down, bond prices down, yields up, and the dollar higher. These are all working alongside commodity prices going up. We've basically learned this week that inflation is going to be a very difficult enemy to beat as it pertains to stock bulls in a market that is still dominated by expensive companies that now are responding to this new policy. And so nothing's really changed. But it was an important update because things could have changed. You never really know when the sentiment tide is turning for asset prices. And so the fact that we keep fading rallies means we have to describe this as still a downtrending market, and in the case of the NASDAQ and many tech sectors, a bear market.
Oliver, I woke this morning to see the, generally we never really talk about particular stocks or securities, but I had to get this one out there because Elon Musk, who owns close to 10% of Twitter, made a pretty significant offer to buy back all the outstanding shares. And, I guess I wanted to ask you less about the politics and all, anything personal about Elon Musk, but what does that mean to the market? And here we are, it's Thursday, late morning here on the East Coast, and where you are, Central Standard Time. But what does this mean for a tech company like Twitter, where the offer is significantly higher than the share price the current share price? I mean, is this something that investors, tech investors, are like, oh, well, I can get out of something for more money, get a premium, and make out? I mean, how do they process that, I guess?
Yeah, it's an interesting situation. There's kind of a broader implication for disruptive tech ideas that are very powerful ideas, but have not been terribly successful companies. That is very salient in this conversation about Twitter. But that's kind of a separate idea. In terms of the actual price action and the market impact, Twitter is such a unique business generally that it's hard to make any big extrapolations apart from that one I just mentioned, that it is kind of an example of how many of these companies are very disruptive and powerful forces, but maybe not the best stocks. In the case of Twitter, there's probably many other companies like this, and now we kind of wonder for a stock like Facebook who's pivoting to Meta, okay, is this a sign that their old mousetrap is maybe not quite as appealing anymore either? But specifically in the case of Twitter, I mean, it's just really good gamesmanship by Musk. Clearly, he's interested in running the company, and he's willing to pay a price for it. But if somebody else then wants to bid now for Twitter too, $54 is higher than where it trades today, but obviously Twitter has been in a pretty long decline, so it's traded higher than his takeout offer before, which means that it's probably not going to be well received, his offer, by Twitter's other shareholders. So it's a win-win for him if it creates a bidding war in Twitter, which is now owned by him in a 9% stake. So it's a win-win for Elon. For 9%, if people start a bidding war, if he starts a bidding war over it, that lifts his shares, he wins. If not, he gets the company. I mean, it's a really smart move by him, no surprise. But it also tells us that we're just really in a very unique world that we've never been in, with just so much wealth concentrated in a select number of people, that a single individual can kind of start with a joking criticism of a product he likes to use and just offer to buy it, which is pretty wild stuff. But that's what happens when you're worth $250 billion.
No, I mean, that's just a drop in the park. $41 billion. I mean, geez, you could cut a check for that. Oliver, this is a short week for trading, and we talked about the holiday. Historically, what does this mean? 4 days of trading, and then we go to Good Friday, we have Easter, and then we come back. How does the market react to the extra day typically? What are things that maybe you're looking at for Monday morning when things kind of return back to quote unquote normal, meaning trading resumes, I guess?
The close on Thursday will be important, given that this week has had a pretty big sell-off and a pretty big rally. The tone with which we go into the weekend is going to be important. I also watched Bitcoin over the weekend, but lately it hasn't really been moving on its own. Bitcoin's kind of lost its utility for weekend trading because just trading hand in hand with the NASDAQ right now. Maybe we'll get some indication if there's volatility around the weekend in BTC, how we open up Monday. But other than that, it changes your volatility dynamics a little bit for the VIX when you have a day off of the calendar. But this is a market that is extremely hyper-focused on the Federal Reserve. It's also focused on what's happening in Ukraine. But we keep getting reminders on a regular basis, like we did this week, that policy is going to be the biggest headwind for U.S. investors at this moment. The fact that we sold off on Thursday early in the morning following some really good jobless data and consumer sentiment, that tells us that the market is not happy with good data because it means the Federal Reserve is going to keep hiking rates, and that's just a really toxic situation for stocks. So we'll see what BTC does over the weekend, but generally it's a pretty risk-off tone right now.
It's going to be interesting to watch. I guess I could see it from both sides, and I guess that's the reason why people need to tune into the TD Ameritrade Network on Monday morning and Monday afternoon, and all points in between to get the real story. Oliver Rennick, always a pleasure chatting with you. Thanks for stopping by, and thanks for adjusting your schedule on this short trading week. Have a great rest of your weekend.
And that wraps up this episode of BRN Sunday. Have a topic of interest, somebody you think we should talk to, drop us a line. And don't forget, for all the latest curated news in lifestyle, wellness, finance, tech, so much more, all in one place, check out today's edition of our daily newsletter, The Morning Pulse. Want to search our archives or check out our latest content? We'll visit our website. That's www.broadcastretirementnetwork.com, and our streaming partners like Amazon, Roku, Samsung, over 100 more. We're back again tomorrow for another edition of BRN AM. Until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes.